Beyond Bitcoin Hangouts are meant to give everyone a voice, a chance to speak with others who are passionate advocates for expanding the blockchain's use cases out into the world and beyond. Do you have a crypto community you would like to represent and hold open hangouts for? If so, you might find yourself on the path to owning a stake in Beyond Bitcoin. We are looking for people who care about people who want to bring others together, because crypto communities are people. Beyond Bitcoin is a movement of thinkers and doers in the crypto space. And if you feel you are one of them, reach out to beyondbitcoin@gmail.com for more information on how to debut your community's efforts to reach to the stars and beyond. Welcome everybody to another Beyond Bitcoin Hangout. Today is Friday, July 1st, 2016. And we are joined today, as every Friday, by a bunch of crypto nerds who just seem to not be able to stop thinking or doing things in the crypto space. The blockchain has, for some reason, caught all of our attention and taken up a large portion of our lives. And that is why you are here, because you are one of those crypto nerds. You are self-identifying here. So I want to thank you all for joining us, and I want to urge you to let your friends know that we have these hangouts for a reason, to give people a voice and to give it to a community who would like to see blockchain technology progress in a human-centric way. And with that said, I'm going to go ahead and I'm going to say today at $12.53 is number one, and that is Cyberfund. And this is a post by Hipster under the RSVP thread. They are the first ones to be covered today. So Hipster, are you there?
Yeah, I'm here.
All right. Well, thanks for joining up today.
Nice to meet you too.
So do you want to talk a little bit about Cyberfund, give kind of an overview to the people here who might not know anything about it? Let's start from just let's assume nobody knows anything about Cyberfund.
I'm pretty sure that nobody knows about Cyberfund. No. So basically, I think our story, my personal story, begins almost 5 years ago. Two of my friends and me, we decided to mine some bitcoins. It was so promising. We mined and let them live for a couple of years until in 2013. In the end of the year, the price was pumped, and those time we realized that there is something behind only currency, you know. I'm sure that we didn't understand the power of blockchain yet. Yeah, I just had a belief that is independent kind of money. Yeah, but almost 2.5 years ago, we decided to quit our jobs and dive in just to try and understand what really happens, why it grows. There should be some more reasons, and we begin to deep. There was only one goal for us. Yeah, we wanted to find a way to get return on our Bitcoin investment without touching the fiat money at all. So we tried a lot of altcoins. Yeah, we quickly realized that is not a way to go. That the technology itself is much more powerful, and we find Safe Network and Ethereum and BitShares. We participated in any interesting crowd sale campaign or whatever, and trying to understand, and primarily from a development standpoint of view, because you know I have a belief that if some blockchain or technology, that doesn't matter, is not interesting for a developer, it wouldn't grow actually, because platform grows. We continue our journey and realize that we need a tool to evaluate our portfolio. Yeah. So that is nobody was able to meet our requirements from a standpoint of assets we were invested in, because there were a lot of, and there are right now a lot of portfolio trackers which are well fitted for Bitcoin forks, etc. But we invested in really new projects with a brand new code base, and nobody had a solution to solve a simple valuation real time of our small portfolio. Yeah. So we decided to build it ourselves with a vision of building something that can help blockchain investors to do its operations. So basically, Cyberfund is a kind of tool right now, we believe, that can help you to make your decision a bit precise, a bit more precise than any tools allow you. I think that is it. Do you have some questions?
Well, first off, I will say that I have some questions. Does anybody else have any questions or comments? Okay, so this Cyberfund, you guys had a crowdfunder, correct?
Not exactly. We are trying to find best projects to put it on a platform, and then find proper tools to measure underlying economy, like CoinMarketCap do. But the huge difference between Cyberfund and CoinMarketCap is in the methodology, because we have a white paper that describe how we count. It includes objective and subjective criteria. The one part comes from our price, from our trade volumes, from objective criteria, and another part comes from how users like this particular system. So we add objective and subjective criteria and have some kind of abstract measure of what this system could achieve. For example, in September, our cyber rating shows that Ethereum should grow very fast, and that is a matter of time when it began. It is, to be honest, I don't like how we count this rating right now. There are a lot of things to improve there, and we need community feedback. Already guys like Vitalik Buterin and Jack Brookman from CoinFund gave us some input how to make it better, but we are going to evolve it, and we believe that this will allow us to filter scams, manipulations, etc. Just to make more meaningful investment decisions. And the second thing we are doing is a kind of calculator for your personal portfolio.
So, out of curiosity here, you guys actually are looking at various metrics to assess whether a crypto-based project or a blockchain-based project is going to be worth investing in, if it's going to be potentially a scam, all that essentially, correct?
Basically, yes.
And what metrics do you look at if somebody were wanting to approach you?
For now, you can see all metrics on a main page. Yes, it is very similar.
Could we get that site?
Please repeat.
Could we get that site for the listeners so they can go check it? So it's Cyberfund. Okay, here, let me go ahead here. It's cyber.fund/rating/whales or cyber.fund. All right, and I'm going to open that back up for you.
Yes, here you can see very similar to CoinMarketCap table, yeah, but with slight differences. What we measure. The first of all, we are measuring token supply when we are tracking 25 exchanges, I mean prices for exchanges and trading volumes. And here are the different ends. Let me explain. The key metric we are evaluating is liquidity relation relative to market capitalization. Yeah, that is thing that will show you not absolute but relative thing of how much liquidity on the market do you have. The second thing, I don't know, do you understand how CoinMarketCap calculates its capitalizations? But they have, I do believe that they have a very serious flaw in methodology. They take only current supply, and that is not correct, just because a lot of investors don't understand that they hold a lot of huge risks behind tokens that was kept by foundations. Let's say Ripple, yeah, let's say Stellar, let's say Scenario. We know that 60, 70, 18% of tokens being held by foundations. Yes, and these are basically are tokens that exists and could be on a market in a minute. But CoinMarketCap calculations don't show it, so this thing led to overvaluation of a particular system. So we fix it and measure our own thing, which we believe will better explain true capital which is behind the particular system. The next thing we are measuring is I call it user love, yeah, because based on stars we can calculate some kind of Sybil resistant metric which will show us subjective thing concerning the system. The more stars you get, it has a quadruple function, like in Steam voting. And so this thing help us measure and filter out systems which have manipulated volumes, etc. And the biggest thing we've done, I do believe that it does really make sense, is a CMGR. You know, in investments, there is CAGR metric that show compound growth rate of the particular asset. And we've done an audit of lifetime prices of every blockchain asset, yeah, and based on this, on the first price of asset, calculate this metric CMGR. It shows compound monthly growth rate, and this metrics is really hard to manipulate, because if you're, for example, somehow trying to hide supply and sell it off later, early investors will understand that there is no returns actually yet here in this particular asset. Everybody always looking into weekly, monthly, maybe yearly price, but CMGR, I do believe, is the best thing that which can show long-term growth of a particular asset on average. So basically that is it.
V-Ball Cool says here, what information goes into the number of stars a coin gets? Is it just the liquidity of the coin?
That is a decision of the user. You can see a link to a white paper. It describes how this rating works. So users decide what they like or do not like. And that is one component of rating. Another component of rating is liquidity. Another component of rating is capitalization grade, etc., etc., etc. So basically, we have now 5 components, and thinking about how to implement more.
So the users actually rate their experiences with these various platforms.
Somehow, yes.
Well, that's kind of cool. So it's kind of like a reputation system for coins.
Yes, it's a reputation system for assets, digital assets. I call it digital assets because I don't know why I don't like the term coin.
Sure, I think digital assets is a great way of putting it because let's face it, the blockchain technology is going to be one of the foundational structures to the Internet of Things. So, in terms of having the payment layer for the Internet of Things, where these things are truly going to be digital assets, and we're moving more into a world like that, digital assets does sound like a wonderful way of saying it.
Exactly. Digital assets could be almost anything. Keys from your flat, stocks, shares, currencies, keys from robots, etc., etc. Passports, identity, reputation tokens, everything.
Now, go ahead. Out of curiosity, how would anybody reach out to you guys if they wanted to contact you and post something to be like a project to be looked at by the Cyberfund?
We have a link in a footer listing, so you just follow a link, and there are some requirements. Basically, we are all content on a site except the dynamic content. I mean, statical content is in our open source library, which is called Chain Gear. So basically, everybody can go to GitHub, make a pull request to Chain Gear, and add any kind of information you want. Papers.
So what I'm looking at, whenever I'm looking at the website, there is a place where you can download the white paper. But when you go to download the white paper, it also lets you essentially upload the white paper for your content as well, and for your, or rather the project. So is this called cyber rating at academia.edu?
Academia is just a site which exists before Steemit, where you can publish your papers. I think I've got a lot of input on this paper, and I'm going to release in several months or so a new version, and of course I'm going to do it on Steam. No way.
Awesome.
These projects excite me so much. I found it I think 1 month and half ago, and since I just trying to discover and understand how things work. Now I feel comfortable with understanding it quite deep, but I'm really excited.
Well, we're looking forward to hearing more about this. We actually have access, it looks like, directly from your site to get the white paper. So if anybody wants to go to cyber.fund, that is the way to get to the website. And up in the top right-hand corner, you can actually go to the white paper. It'll show you join us, the price per Bitcoin, the blog, and then over all the way on the left of that right top-hand corner is a white paper link. So anybody who wants to learn more about it, feel free to click on that white paper link and get access to it. Thank you very much, Hipster. And of course, please feel free to post any new updates to the next week's RSVP thread if you would like to get coverage for any updates or anything else that's going on that's cool in the scene.
Thank you so much. Yeah, we have our personal forum, Cyber Talks, which is not live actually, so we are going to shut it down and move our community to Steam. This kind of announcement, you know.
Wow, that is great. The
Yeah,
blockchain man.
yeah, I'm blockchain man. You know, I believe that the huge value in Cyberfund that you know we are going to actually use deeply these systems we are investing in. So now it is kind of a thing that show some part of economics behind the systems, but I do believe we will integrate into uh, every system step by step. For example, I think we are the only project who has real-time after update balances for 15 blockchains and 35 assets. So you just put an address and it will update your money and valuation in real time.
That's really awesome. I look forward to hearing more about this. Now, real quick, one final question, for me at least, and then we can open it up to let anybody who wants to talk about this feel free to talk about it. If somebody wants to get in contact with you or your team, how would they go about doing this? Do you have an email address or a certain location? Like you said, you just are basically shutting down the forums. So is there any other location where they can reach out to you?
All our development happens in Jitter. Sorry, not Slack. We like Jitter, but it is very nice and easy and easy to use with GitHub account. So feel free to join. Sometimes we talk in Russian because we have a Russian team, but free. Everybody of us understand English quite good. So Jitter on GitHub, the links and in the footer of the site.
Thank you very much, Hipster. Does anybody else have any questions or comments before we move forward?
Thank you guys.
Talkinator, you're a sweet guy.
Thank you guys.
Thank you, man. Okay, up next is at $7.20, PeerPlays. Crypto Prometheus, are you there?
Yeah, I'm here, Fuzzy.
Okay, well, I'm going to go ahead and pass the torch to you if you don't mind, and maybe you can give some updates and progress reports on all the cool stuff going on behind the scenes with PeerPlays.
Yeah, great. So, hello everyone. My name is Mike Maloney, also known as Crypto Prometheus. I am the PeerPlays Communications Manager, and I'm here today to give a little bit of an update on what's going on with PeerPlays. So today, we're very excited to announce that we have just released the code for the PeerPlays profit sharing module for the Graphene Toolkit. You can go and look at this code right now. It's on our GitHub repository, github.com/bunkerchainlabsinc, all one word, /PeerPlays-profit share. I'll throw this link up in the sidebar here in a minute too. So we've just published this today. It's published under the MIT license. We decided to go with an MIT license for this particular bit of code for PeerPlays because we feel that this is very important for graphene and the graphene ecosystems as a whole. So we wanted to get this out and make it available for everyone. This is part of our milestones, the PeerPlays milestones, which we published about a month ago. This is our very first milestone, July 1st. And so I can give you guys a real brief overview of what the profit share feature does. I'm going to have I'm going to be drawing up or writing up a more detailed synopsis this week once the API functions are a little more documented. So I can give a more sort of nuts and bolts analysis and explanation of all the different functions. But for now, I'll just say that Basically, what this feature allows, is the creation of, I think, what we're calling an accumulation account. And so this account would receive funds either from sent individually from a person, or the funds can also be routed there, say from an FBA, for example, like Stealth would be a good example. All of the fees that were paid from Stealth could be routed into one of these accumulation accounts. And then from that account, the issuer can make profit sharing distributions to the holders of a particular token. So again, using the example of Stealth, everyone who held the Stealth token, all the fees could be accumulated into this account, and then the Stealth committee could periodically send out the profit sharing distributions. And the way that would work is similar to a stock dividend payment, where whatever percentage of the whole that a holder owns, that's the percentage of the distribution that they would receive. So they're split up based on the ratio of how much you hold as a whole. So this feature, it's got a little bit of fine tuning, and again, like I said, I'll be discussing this in more detail in a post that we make on our news site later this week. That'll be peerplays.com/news. So keep an eye on that, or join our mailing list at peerplays.com if you want to keep up to date when that comes out. But essentially, some of the more fine-tunable features include the ability to set a I'm not sure exactly what we're calling it, but it's very similar to an ex-dividend date and a payment date. So again, using the analogy of a stock dividend, you can set essentially a vesting balance that will mature at a certain date. So you can create the distribution, and then it doesn't become available to the end users or the holders of the whoever you're distributing to, until the vesting balance is matured. So essentially, you can use this feature to along with the whitelisting features, and all of the legal compliance features that BitShares supports, for example, that Graphene supports as in the base toolkit, to list a stock on the exchange, on the DEX. So that's another advantage of this. PeerPlays will be using this feature to distribute to the core token holders themselves. So all of the fees and different wagering fees that are charged, as well as various other elements that will involve fees on PeerPlays. All of those funds will be routed into an accumulation account, and then PeerPlays will actually be set to automatically make the distributions at periodic intervals. I'm not sure exactly what the intervals are going to be to start, but those intervals themselves, I think, will likely be able to be adjusted by the committee members of PeerPlays. So this feature will actually be integrated into the to make the distributions to the core tokens. That's how PeerPlays is going to be integrating this feature. So let's see. I think
That's cool.
yeah, it's really exciting. And it's something that, as far as I know, is a first in the cryptocurrency world. I haven't seen any other cryptocurrency token that's backed by the fees that are charged on the blockchain before. Depending on what type of consensus algorithm blockchain you're talking about, a lot of the proof of work chains end up just paying all the fees to the miners, right? And then you've got proof of stake coins that'll pay miners either through dilution or through parts of the fees. But PeerPlays is going to be very unique in that we're going to be potentially collecting quite a bit of money in fees, because it's a wagering platform and a gambling platform. So there are needless to say, tons of rake fees and things like that involved, even if PeerPlays chooses to set the fees, extremely low in order to compete against the centralized gaming sites. So even with very, very low fees, there's still a ton of money that's going to be coming in. And so because of that, the core token of PeerPlays is actually going to be, backed or underpinned by a fee distributions, regular periodic fee distributions, which are essentially a share of all the revenue that's made in the network. So yeah, it's an exciting thing, and we've been talking about it since the beginning, and now we have the actual code that we published. And like I said, for this particular piece of code, that we've written, we've released it under the MIT license. So I think there's going to be some more discussion this week. I know we'll be posting a thread on BitShares and Steam it as well, about the feature. And so that's. Go ahead, Fuzz.
It seems, it seems. I'm just listening to this and hearing that, hearing you talk about proof of work, and then moving to the point of the proof of stake. I keep wanting to say point of sale. Two different POSs that people have to deal with in crypto, huh? So regarding the PeerPlays, it's like it's taking it to a next step, right? The next logical conclusion, and something that is closer to the traditional vehicle that people use to hold tokens in the real world, or which we call stock, dividend paying stocks. And this is essentially that next level, because where in proof of stake, they're essentially doing something similar, which is giving new coins to those who are holding stake in the system. And the people who have more stake in the system have a higher chance over time of getting payouts, essentially. But in this system, you do not necessarily need to expand or quote unquote dilute the supply to have that dividend type of feature sent out to people who are holding these tokens. Is that correct?
Yes, that's correct. One of the things we've been considering a lot lately, and I think everyone in crypto has been considering, is the fact that we still haven't seen, in any meaningful sense, really strong, profitable blockchains. I mean, in terms of serving a purpose, onboarding lots of users, something that would replace a traditional, business. We haven't seen that a lot lately, and so a lot of blockchain projects are sort of struggling at this point to come up with ways in which they are going to be relevant, right? I mean, everyone sort of sees the potential and everything, but the value is still very much speculative. And so, I mean, I don't want to conflate the consensus algorithm into this. I mean, I mentioned it just in terms of the fact that we're able to actually afford to share the fees with the users. And the reason for that is because graphene is very lean and mean, right? We spend significantly less amount of money securing the network than most other coins of similar market cap, right? So we have very little overhead, and because of that,
and you can adapt.
Sure. Yeah. I mean, yeah, we have lots of different features that allow, the consensus is extremely flexible and malleable in terms of being able to fork in new code and things like that. But ultimately, if you add the fact that, for example, PeerPlays is going to be bringing in, a significant quantity of outside revenue, then that revenue, of course, doesn't need to be spent on paying additional miners or additional witnesses and things like that. It can actually be cycled right back to the holders of the core token. And so there is a little, for bootstrapping purposes, we do have a reserve fund similar to what BitShares has. It's not quite as large as BitShares is. I think BitShares has still has like $1.5 billion BTS in the reserve fund. which is approximately what 40% of the chain or something like that. I mean the existing tokens now. So we have a smaller
Hmm.
reserve fund for PeerPlays, but out of that reserve fund will actually be a way to bootstrap witnesses, for the first couple of years or less, depending on how quickly we start to generate a good amount of revenue with all the services that PeerPlays provides. So once PeerPlays begins to generate a good amount of revenue, then there's actually a smart contract that can simply send a percentage of that revenue to pay the witnesses, and essentially the security of the chain can be paid for by the revenue that the DAC is bringing in. So, it's really interesting when you think of it just in terms of a business or a cooperative. The revenue comes in and then it's routed and split in various ways depending on what needs to get paid for. And ultimately, you have a situation where dilution of the token doesn't need to happen at all. And in fact, the way that we've mapped it all out and planned it, there will never be any dilution of the core token of PeerPlays. So, the profit sharing is going to be split amongst the same amount of tokens, from now unto, the end of time. And yeah, but anyway, getting back to your question or statement, Fuzzy, yeah, you don't have to be a whale in order to participate in the dilution, unlike or not in the dilution, I'm sorry, in the profit sharing. Unlike some of the the other proof of stake systems where you have to own a certain amount of tokens and lock them up in order to be able to run a node and receive tokens in return for that. None of that needs to happen. You can own one single PeerPlays token and receive your percentage of the profits that are coming in that are, to the network that are being paid out as profit sharing.
And those profits are actually coming from outside into the network in return for services. So the fact that this is occurring means that you guys don't necessarily even need to expand the supply in the way that current proof of stake systems work, right?
Yeah, exactly. We will not be expanding the supply. The current supply of 1 million tokens that we have set as the hard cap, 5% of that is actually going to be part of the reserve fund. So that supply actually isn't even going to be, immediately when the chain launches. It's that 5% of the supply won't even be, in circulation. It'll be in the reserve fund. It'll be used primarily just to bootstrap witness pay for the first few years at most. Until which time the network itself is generating enough revenue to begin to pay the witnesses, and then that supply can either be burned or it'll likely probably stay in the reserve fund. We do have a worker proposal system that's set up for PeerPlays, but I believe we're going to cap the amount of the amount that can be requested through worker proposals, because we don't really want to use the worker proposal system to be able to access the reserve fund. We want to use it more as a like as a referendum, tool. In other words, ways to poll the stakeholders. Voting on whether or not a new feature should be forked in, and various other things that would need to be that a poll of the stakeholders would need to be taken. The worker proposal system is great for doing that. So but yeah, it's very much the whole thing, the way that it's set up is very it's just very efficient, and like I said before, lean and mean in terms of the what can be accomplished and the with the minimum amount of resources spent. And so the resources that are being gained, the revenue that's coming in from outside, that all becomes the profits of the DAC become shared in the through profit sharing as a decentralized autonomous cooperative.
Backed by people, like a service that people actually want to pay for, that is run on a blockchain.
Yeah, I mean, gaming is really just a natural bridge. It really is. I mean, I think that
Yep.
the other natural bridge, I guess, is social media, and Steemit is really taking that by the horns, and is doing great things with that. So, but in terms of demographic, people who are already there and already have a good amount of knowledge, and people from developers to the people with skills and various different types of skills. Everything, all of them are going to have opportunities to make money and to contribute their skills towards, towards a system that's going to feed back and feed them back rather than something that just takes and takes and takes from them, which is a lot of, what a lot of the social gaming ecosystems, not all of them, but a lot of them are, sort of centrally controlled, centrally based. You have gaming companies that like to, I say fleece gamers for their hard-earned funds, on a regular basis. And of course, they have to make money, their businesses, but the way that PeerPlays is set up is going to align the incentives so that gaming developers can make money, and also the gamers themselves can earn revenue and earn income through their skills, and learning new skills and being able to use those skills as well to generate additional revenue. So yeah, it's really exciting. It's really exciting. And I just wanted to add as well, before I wrap up my update here, we also have the PeerPlays logo design contest, which is currently running. That's going to be running, I believe, look at my calendar here, until the 10th of July. Yeah, next Sunday, the 10th of July is the end date for that contest. So we have a $1,250 bounty right now in Bitcoin, or PeerPlays tokens as well. You can take the payout in PeerPlays tokens if you'd like, for a new PeerPlay logo. So anybody that has any skills in graphic design, please go to work, go to town, get a really cool design put up there. In fact, I think you can submit up 3 designs a day. So if you've got a number of different ideas, get them all put up there. And we're going to be taking a look at all of those over this after the 10th, and finding the one that is the best one for PeerPlays, and then we'll be giving away a $1,250 bounty for that. So anyway, yeah, so that's my updates for this week. If anybody has any other questions, I can take them now.
I just wanted to say congratulations and thanks for contributing the code to the graphing community. And I also wanted to remind people that PeerPlays has also committed to doing a share drop on BitShares, which also I want to thank you for again.
Yes, that is true, and thank you, Brindle Swan. I appreciate that. Yeah, PeerPlays will be share dropping on BitShares. We haven't announced the date for that yet, but we'll be announcing that in the next month or two, and so yeah, everyone in the BitShares community as well will also get a portion to come and play with when we launch the chain. So
Awesome.
yes,
Talkonator here is saying real quick, can you remind us of the next milestone crypto?
Sure. So the next milestone is the launch of the testnet. The testnet will be launched towards the end of September. The testnet will have the smart contract for playing the very first fully blockchain-based game. The game will be completely programmed into the blockchain at the native code level. We haven't announced the name of that game yet. We're keeping it a secret, but it's going to be a lot of fun. And that testnet will be live. It'll be for beta testing primarily, but also anyone will be able to go on and try it out. So that'll be happening. I think the 17th, 18th, or 19th, somewhere around there of September. So that happens. Following that, the month after that, we'll be having an auction-style crowdfund for the remaining PeerPlays tokens, the remaining ones that haven't been allocated. And then in November is the launch of the blockchain. So those are the 3 major milestones. We do have another really cool major contest that will be coming up towards the end of the summer, probably sometime in August. We'll be launching that, so stay tuned for that. And we've got a referral rewards plan, or I'm going to call it a contest, but a program that we'll be announcing here in a few weeks, I think, as well. That'll give everyone who's PeerPlays token holders the opportunity to earn a little bit in the interim here by promoting PeerPlays. So we'll be announcing that. I think we're waiting for the logo design contest to be over so we can figure out what our logo is going to be, so we can create some cool banner ads and things like that. So yeah, so that's the plan for this summer. Yeah.
Real quick, Crypto, can you remind everybody who is listening, if they haven't already heard this, how to get in contact with you if they would like to, you or the team, if they would like to work with you in some way, shape, or form, help out, join up in some way. Could you give maybe an email address or another way of contacting you?
Yeah, sure. All of the contact information is on peerplays.com/news. So if you check out that site, you'll find a number of different ways to contact all of us. Everyone on our team is sort of independent in terms of our own spheres of influence. We've got from Dan Notestein and the Block Trades team to Fabian. You guys know him as Xerox. And myself and Jonathan and Chris Coney, who's the marketing monk. And so everyone has their own forum handles and things like that. So I'm not going to rattle off everyone's contact information individually, but if you check out peerplays.com/news, you'll find all of our profiles, all of our contact information, all of our social media information, and everything is all on that site.
Awesome. Thank you very much.
Yeah, thanks, Fuzzy.
Of course, this is what we do, right? I mean, if people didn't show up to hear about these various blockchain-based projects, then we wouldn't exist. But we have a healthy little group of people who cannot be satisfied. It seems like Hangouts could run all day long. So people who join up and talk to us and advocate about their projects and teach the general populace who is listening about the use cases and how blockchain technology is going to change the world. It's worth it. So I'm glad we all come together for this too. While we're waiting for Ken Code to respond, I'm going to just remind everybody, we have the sharebits.co right now, guest book back up and running. It's being tested. This is the first time we're testing it. This is going to be kind of a real world live test. Feel free to add yourselves to that by clicking on the link and signing the guest book. Those who attend these Hangouts, we want to give you credit, which means that at the very least we can put you on the credits of the Hangout, kind of like they do with movies. So those who do join up, you are in a good position to post whatever projects you are working on, your contact information and all this stuff to the guest book, and we can give some credit to you. Okay, the next one would be at $5.28. There was a gentleman named DJ Leo who wanted us to talk about Monero and the importance of fungibility. And for those who are not familiar with either of these terms, Monero is a cryptocurrency that is known as a privacy-centric currency. Now, I'm not an expert on Monero, but I'm pretty sure that they use ring signatures. Is that correct? Does anybody know? Well, I believe they work on ring signatures. Monero is supposedly, from what I've read anyway, it's supposed to be one of the best ways of making sure that a currency is private. Now, I can't go too much deeper into that, but I will say that Monero, it uses the CryptoNote protocol. So if you want to look into the actual way that the privacy solutions are implemented for Monero, it is central around the crypto note protocol. And it's an application layer protocol that powers several decentralized, privacy-oriented digital currencies. So it apparently is not the only one, but it was the first one. Oh, my apologies. Cube, Monero is a fork of Bytecoin, is what Cube is saying. Thank you. Now, with respect to fungibility,
fungibility is the fact that one unit is the same as another, is the not the desirability of it or its use in trade. It's that any given dollar equals any other dollar, and some people think it's an important aspect of money, but not necessarily. Every Satoshi is unique and might have some collectability as well. So fungibility is a complicated issue.
The term fungibility is really a very, very generic term. I think we're adding way too many. The term just simply means it's the unit or the currency itself, or even a commodity. I think in some regards, something like gold, is just, it's the same no matter what. No matter which unit you use. So like Brindle Swan said, a dollar bill is going to be the same as another dollar bill. It's going to be the same as another dollar bill. You don't have to have this particular dollar bill in my hand, in my left hand, is the same as this particular dollar bill in my right hand. Either one of them that I hand to you, you're going to say this is a dollar. Now, if I had a particular, amethyst crystal in my left hand and a different amethyst crystal in my right hand, well, those are two qualitatively different things. And you would say, well, this one might have some particular value or quality that this other one doesn't. They're both amethyst crystals, but they're not fungible because they're not interchangeable in that way. So that is the really only strict definition of fungible. Everything else that we talked about, I think, falls into categories other than the strict definition of fungibility.
Fuzzy, the distinction comes down to the definition of an asset, and that's something that can be described in terms of a quantity and a quality. So water is not an asset because you're not describing it in those terms. Drinking 6 ounces of drinking water, you have 6 is your quantity, and drinking water is your quality. 16 acre-feet of processed water is a completely different asset because it's described in those two terms. So every asset needs to have those two things assigned to it. And that's where it pretty much starts. And then the variance within those quantities and qualities of comparable assets is now the economy.
Because the differences are going to be subject to the perceptions of the market participants.
Well, in the terms of water, you would have 6 ounces of drinking water. That's relative. The quality of that drinking water is now. So when I say quality, I don't mean quality good, bad. I mean quality of what's the characteristic of the water. Then you start looking at the variance attributes of that characteristic. So the variance of that characteristic now is what we think of as quality.
No,
Could you explain a little bit more?
Dan, as he usually does, is describing something at such a base level that it almost is confusing until you take away all the barriers and realize it's actually very simple.
And every single asset without exception is described in that way. Otherwise, it's not an asset. So a lot of bullshit that comes our way is described. Somebody says, "Oh, go buy this pill; it's going to make you stronger," but they're leaving out so much critical information. You have no way of valuing it. And the biggest crime, of course, is with human labor. When intangible, like for example, motherhood is responsible for every single taxpayer that ever lived, but it doesn't appear on the GDP. That's a way to keep people sequestered by taking away their identity, and they take away their identity by not giving them a means of describing an asset. And that's I didn't mean to go on that tangent, but that's the other side of the coin. If you don't have the discipline to describe it in those terms or to understand it in those terms, then you're subject to being ripped off in many ways.
Well, this is a very important topic that I think that I'm glad that he brought it up because it's actually taught me a little bit.
Well, energy is a derivative of productivity. You can't.
Sure.
So that's the point we're trying to get to, is a direct connection to productivity, not going through all these hoops like, okay, well, energy is, productivity is derived from energy. Therefore, energy represents something I'm going to probably agree to work for because, yeah, I need energy. And so you kind of have this remote loop of fungibility, but it would be far more direct if we could simply articulate human productivity directly and then put a currency around that. That's kind of how I see it.
I
Well,
think
I would love to
LaFont-
hear a little bit more about that in Genesis. Maybe you should talk about it a little bit with respect to your project and maybe next week's hangout or something to that effect.
I put a few posts up on Steemit recently that kind of dance around the subject. I mean, trying to keep articles down to 300, 400 words or less. So if you want to go read those on Steemit and vote them up while you're at it, then let me know. We'll talk more about it.
Yes, of course. And you are posting those under the Beyond Bitcoin tag. So if anybody wants to go and upvote that content that you're posting and learning about it and learn about what you're teaching everybody here, they can go to the Beyond Bitcoin tag on steemit.com, and that's where you normally are posting things, right?
Yeah, and I'm thinking, Beyond Bitcoin is exactly what we're trying to do. We're trying to get beyond Bitcoin, try to go farther than where it's at now. So that's why I'm trying to make that the home spot for these discussions.
Oh, go ahead.
I just wanted to say LaFauna's comments in the chat box about Monero's relationship to fungibility, I think, get at the heart of the matter of what the guest who didn't show up wanted to probably talk about.
Okay, from LaFauna, it says here, on Monero's relationship to the fungibility, I think it has a benefit over non-private blockchains. If the governments ever decide to go after coins linked with quote-unquote illegal activities, one could imagine a Bitcoin with known history passing through blacklisted accounts may be perceived as more risky than a newly minted coin. If it is perceived as being more risky, the price could be lower, and then it is no longer fully fungible with a newly minted coin. And that makes a lot of sense because then that old coin, since Bitcoin is traceable, could carry the risk of being used in the past at some point in time in a chain of transaction. And with being used for illegal activities or something that's considered illegal by a government entity that has guns and can take you and put you in a box somewhere. So somebody might be afraid to have a Bitcoin that is connected in any way, shape, or form at any period of time in the blockchain's history being connected to those illegal activities, because it might mean that they're looked at and there might be more risk that comes on board with that if
that's the problem.
Governments choose to attack Bitcoin.
That's the problem with proxies. You're attached to them, so you really want to eliminate them, get around them, and have a direct connection to productivity. Because if the government can hold an energy as the proxy, then everything has to pass through that filter, and this is what we want to get away from.
So essentially, the blockchain itself, as sort of an immutable record of the history of, the genesis of where that energy was converted into some sort of, tokenized representation, could be beneficial in separating us from the need to contribute to the energy that's catalyzing all of these other things. So I'm thinking of the U.S. dollar, for example, is soaked in blood and tears and cocaine and all the other horrible things you can think of in the world, and yet we are sort of feeding into that as well, just by passing those dollar notes, and we don't know which one came from where and who we're actually supporting by propping up this system. Whereas, if we had a way to directly capture, like Dan is saying, the productivity into or at least align ourselves and parallel the currency that's being issued with the energy that's being expended and in creating whatever it is that we're creating, whether it's infrastructure or artwork or food or things that we need, then we can actually unhinge or eventually stop supporting things that we don't want to see in the world, right? We don't have to support cocaine smuggling, for example, if we're not accepting or using the currency that is the currency of cocaine smuggling, right? Like we can
Cocaine coin.
cocaine, yeah, or all the other, things that we'd rather see less of, let's say, in the world. So it's very interesting, and just what Lafona said kind of reminded me of that, because of the reality that the blockchain is sort of just a record of events as much as it is a quote unquote currency. It's
Yeah.
a record of who did what when. I mean, it's just a big timestamping machine with in a database that allows people to set the record straight, so to speak. And we can utilize that socially in order to set the record straight on what is a clean, honorable, machine, economic machine for generating, or for turning energy into, for solidifying energy into matter, so to speak, for turning productivity into usable, goods and services. And we can separate that from what we think, what we collectively, or what people see as not a good way of using that. And in other words, growing coca plants, or sex trafficking, or bombing small villages for profit, or whatever it is that is being engaged in by the ones that can simply print dollars at will, or whatever. So yeah, it's interesting. It's it's very promising, actually, in terms of of what potential we can unlock in this way.
Well, there's both sides to the equation, right? It's kind of a double-edged sword, because on one end you have this ability to potentially track everything, and we're talking on a very, micro level, where, our transactions are essentially some of the most intimate parts of our lives. So that connection, and that, having that on a blockchain and extremely transparent, can be extremely helpful if I don't want to support the drug trade or child pornography, of course. But then on the other end, it can also be used to get as a weapon against good people, right? So it's very interesting, this debate that pops up around um, the kind of this theme of what we're talking about, with respect to what Lafona was talking about Monero and fungibility.
Well, I think we have to remember too that as we develop systems that work better in this way, that there's going to be less and less of the sort of shadowy, elite overlord class threat overhang that we can't really put our finger on, but we think or know is watching us at all times and trying to come and get us. I mean, this is that in and of itself is sort of a double-edged thought experiment, because we're prone to keeping our mouths shut, or being extra hardcore security conscious, because we feel like there's this threat of something that's coming to get us if we step the wrong way, and they decide that this isn't what needs to happen. But I think that this is so revolutionary and so grassroots in its implications, that those things will eventually be phased out over time. And if you look at at the base level, where the currency itself is generated from, what is the economic engine that's actually spinning off, or the currency as a derivative of, then having that foundation is going to make it much more difficult to run these other operations in any sort of sustainable way. And what I mean by that is that if you look at for example, the drug trafficking trade, and you look at who engages in the majority of drug trafficking on a monetary level, who has the most skin in the game, it's the banks, and it's a number of different sort of quasi-governmental, quasi internationalist organizations some of which are masquerading as the good guys, some of which are sort of hiding in the shadows, but they have their fingers on the button that prints more money, essentially. And so they're able to, through those machinations and manipulations, essentially be at the genesis of the generation of that currency, and thus are able to sort of just continue their operations ad infinitum. And if that were to be cut off, or if that currency were to no longer to be the coin of the realm, because it's finally seen for what it is, and currencies that were more in line with, let's call it positive, life affirming productivity, that they would then be sort of the secondary layer if they wanted to continue to run a drug trafficking or a sex trafficking or any other horrible criminal enterprise. They would be subject to trying to get their hands on some of the good funds, the funds that are being generated through a legitimate sort of life affirming economic engine. And
like
so
something that's got rules, where as opposed to being a banker who essentially just pushes a button, distributes the money that is created out of thin air to a small group of friends who can utilize that money before the dilution affects everybody in the system.
Right, they're
You're
front
saying
running
those
everything.
rules essentially cut that out.
Yeah, they're front running everything. I mean, I kind of tend to hypothesize that there's a lot less will on this planet right now to continue these activities than is actually happening. And the reason is because exactly, if you can control sort of the money supply at that level, then you can subsidize any activity you want. You can make sure that whatever activity is your preference, whatever you prefer, whatever you're into, whatever your desires are, you can subsidize the activity and basically make sure that activity sort of proliferates. I don't know if that's the word I'm looking for, but
I would say that's the right word for it, because if you think about it, I mean, if I'm printing off this money and giving and subsidizing, like you said, a couple businesses that are close to me, and you're a competitor and you don't get that, you're getting hurt in two ways, right? Because not only am I giving that money to them before it's actually devalued all of the money in the market, but once it gets to you, it's devalued in the market. As a competitor, the money that you're using now is not as valuable as the money that your competitor had early on. So you're getting hurt in two ways here.
How many people have seen the video Curiosity that's on the it's up now on Steam under Beyond Bitcoin?
It's worth watching if anybody hasn't seen it.
Because the way they get us, I put a blog post up called Hacking the Financial System, and there's 5 components to the financial system that have to be in place working as a system in order to be functional. One of them is currency, one of them is entrepreneurs, and another one is the market, supply, demand, all that. But then there's 2 pieces, accounting and currency. Now, currency is the thing we're all excited about today, but accounting is the problem where nobody's talking about. How do you account for what is productivity, what isn't? What are the factors of production? Land, labor, and capital is what dominate us today, and we need to organize and go to a different form of factors of production, and this is what Curiosity lays out. It's an extraordinarily simple thing to do, and we just need to organize around and do it, but we can literally cut off visibility of product. We can literally redefine economy by redefining factors of production, and Curiosity does that explicitly on a blockchain. It's a fantastic application. That's the thing that we're trying so hard to build. There's a group out in Indianapolis working on it. There's people, and this is what I do, is try to get Curiosity built. But that answers so many of the questions that are being asked here, especially in this conversation. One of them, of course, is the productivity of oil. Why are we talking about that? We should be talking about the productivity of the farmer who has oil. So that's the thing that we should be quantifying, not the oil defining the farmer, but the farmer defining the value of the oil. It's almost a mirror image economy, and we can't see it because it's so clear. Okay, we can't see it because we're looking an exact mirror image of the economy that was supposed to happen. The economy we're living in is a mirror image of the economy that's supposed to happen. So it's so similar, but the distinction is so basic, and Curiosity brings that idea to the forefront. Maybe not perfectly, but at least it gets it out of its cage. And I really need to have folks look at that and criticize it and tell me what's going to work and how to pull this thing off, because we're trying to get to a point where we're going to make a big flip, just a flip to a different type of economy without the cities burning, without people getting carried away in terrible things. It can happen that way. A very peaceful transition can happen. And this is what we're aiming for. So, we need some help. So it's only 16 minutes long. And it's quite profound. It's the best we can do, and we just want to get it better.
Well, I will definitely urge people to go and check out the Curiosity video and read your articles. I've read through quite a bit of them myself, and Dan, you've been doing this for 23 years, so you've been thinking about this stuff before crypto existed, and it's pretty obvious because you bring in some perspectives that we often don't really even consider in crypto, though we are beating around that bush and trying to figure it all out, right?
Yeah, well, I was involved with NAFTA, and back then in the old days, 20 years ago, decentralized markets were good and centralized markets were bad. Don't those words sound familiar? But what happened was it was poorly implemented. And what you had was re-centralization. You didn't have decentralization, you had re-centralization. And that's what it just gets re-centralized into another form, and it's still the same old game. So that's what I fear for cryptos right now. I fear that they will be re-centralized, not decentralized. And this is something we should all be fearful of. We have to get at that nugget of running the accounting system. We have to own the balance sheet. And if we don't own that, we're just going to reproduce the same old thing. Much better,
2.0.
We build a better fascist unless we get it right.
That's an extremely important point, Dan, for sure. I see that happening, and I've seen it been happening in BitShares and other cryptos for a long time. So that's a very extremely important point to be diligent about.
Well, this is also one of the reasons why we open these Hangouts up to people from various projects, because let's face it, the blockchain technology is powerful and it's amazing. But the best thing for people is for a coin or any of these ecosystems, is for people to get together and let their ideas work together and come together and find the places where they are wrong and where they can learn and improve. Because as the community itself that backs these different tokens and technologies grow and learn themselves, those technologies are going to learn and grow in a very similar path. So, from learning things from Dan and what he's talking about with NAFTA, these are things that all of us can take and hold in our brains for, when we're thinking about various other things, and take these experiences into account, because we kind of have no choice but to learn from the past, or like he said, build, the next system the wrong way, which might be fascist 2.0.
One thing that I've mentioned before that seems to be applicable right here is that in my mind, I see either or, a yin-yang kind of relationship between blockchain as a public ledger where everything should be public versus privacy where people can protect their assets. And I don't see how that will work out. It's a very confusing kind of dichotomy with regard to how cryptocurrency works, because you need both in certain situations, but you can't have both at the same time. It's really confusing to me how we're going to work that out, but it's interesting to watch at any rate.
Well, Curiosity uses something called anonymity till the point of transaction. So like the analogy is like Craigslist. You get to see all the data, you get to see all the prices, you can build charts, you can do whatever you want. but you're anonymous until the point where you decide, okay, I'm going to transact, and now you are now you jump into the public domain. And this has been considered as an identity tool for banks, even, where they can do all their scenario testing, they can run their models and everything in an anonymous area, which insulates them from regulation. And then when they find the right scenario, which is going to bring them a business, then they just jump into the legal sector and they perform a transaction. So that's kind of what we're aiming towards, anonymity until the point of transaction.
So and you're also focusing, I think, on the individual, the human being, the attributes that they have, the skills, the perhaps certifications or experience, the what did you call it, the knowledge ultimately, right? That you talked about, like an engineer having a particular amount of knowledge that is sort of pigeonholed into certain places, when that engineer actually should be able to simply, go around the world and apply their knowledge to wherever it is needed. But since the markets sort of restrict that, engineers are limited to
Compartmentalizes.
Compartmentalized, right? So engineers are limited to, for example, working for Boeing for their entire career, and if they try to leave there's all these restrictions and difficulties, and trying to go from country to country. And so I think it's something that you're right. It sort of requires a flip in terms of how we think of what is valuable in the world, and rather than placing value on sort of the replication or the inanimate objects, whether they be commodities or currencies or something in the world, we're actually flipping it around and placing, creating the economy out of what can people do, what are people skilled at, and the resume that they create, the curiosity, that is, of course, not linked to their identity, like you said, until someone chooses to sort of employ them or employ their services, is sort of taking the value away from everything on the outside and placing it squarely on the human being and every human being, right?
Yeah, and they want to sequester engineers. I don't want to mean engineers, just educate engineers. I think all makers of useful things are engineers. They want to sequester that because that's where the value is. I mean, it's not gold, silver, or oil. It's between our ears. And if they can sequester us, enslave us, then they own that value. They control that value. What Curiosity does is takes this knowledge asset and puts it in the format of an asset. It assigns it a quantity and a quality. And I don't mean quality 1 to 10. I mean quality in terms of what's its value proposition. Okay, and that's all it does. It's an analog to digital converter of knowledge assets. It puts it in the form knowledge, it puts it in the form of an asset, and then turns it into cryptography. And now that's a very, very powerful weapon to be deploying out there. You own it. Nobody could take it away from you. You deploy it so that, if somebody wants to enslave you, they have to pay you for it, which is kind of the antithesis of slavery. But you have the accounting system, you have control, you're minting your own value. So your incentives are now different, entirely different in the way you interact with society. And that is probably the way we're going to solve many of the problems out there.
It makes us all free agents, essentially, right? We can capitalize on the merit of our earned skills and experience and become free agents in the marketplace rather than
capitalize. You used a good term, capitalize. What that means is you're able to bridge the capitalization gap. That means what Curiosity allows you to do is predict the likelihood that a certain group of knowledge assets can achieve a business plan in the future, which that bridges the capitalization gap. That's how you can borrow money today for delivering an outcome tomorrow. So that's the same thing as debt, except it's done from innovation, not backed by debt. It's backed, so future productivity is backed by innovation rather than backed by debt. And you can't make a bet without odds. That's what Curiosity gives. It's those odds. So it's all packed into a nice 16-minute video. I hate to sound like a commercial, but I really need folks to watch that.
So you're essentially creating opportunities for those who have access to capital in whatever form that may take, whether it's resources or money or commodities, to find human beings and projects to invest in, or in whatever permutations and complexities that involves. You're essentially sort of, again, opening all of that up into where everyone can become a free agent rather than being restricted and pigeonholed into the sort of enslavement of the current ways in which essentially people try to interact with each other and find employment and get paid for the work that they do.
Yeah, value right now is articulated in whatever can be expressed as the gross domestic product or gross national product, and we all know that that's maybe 2% of the value that people actually create in terms of relationships and creativity and intellectual property and helping each other out and building community and motherhood and fatherhood. All those things are value creators, but they exist nowhere on an accounting sheet. To expand the definition of what is valuable, what is tangible, is how we source. That's the oil, that's the fuel we need to get things done. I mean, there's no shortage of things that need to be done. So yeah, I guess that's another way of saying you're 100% right.
I want to get back a little bit to Tom's dichotomy between privacy and reputation, and I want to suggest that the problem is insurmountable to us as individuals, and what we have to do to have a balance is we have to become small teams. So if I start getting a decent revenue from PeerPlays tokens, rather than the IRS being able to see that it's coming to me, if it comes to a multi-sig group of 5, then we can play with the cryptography so that somebody may not, so it'll be deniable that somebody in the group may not actually be receiving an equal share, and nobody outside of it could tell if that was the case, and everybody in the group could claim that they did not receive the equal share. So that'd be one example of how a group could help on that end. And for building reputations, groups are going to have a big advantage over individuals as well.
Well, there is some merit to that. However, you're kind of collectivizing what should be made for the individual. So in terms of hiding income, perhaps that is a viable strategy. I haven't thought it through very well, but regarding what it sounds like on the surface is it kind of collectivizes incentives. Whether that's true or not, I'd have to think about it a little bit more.
Yeah, well, I think the group trap of Harry Brown and his book, How I Found Freedom in an Unfree World, is kind of off a little bit. I think humans work, especially males, we like to work in the hunting party, not just at the level of the tribe. And in fact, startup companies are the closest thing I can imagine to something akin to a hunting party, and I think that that's really a super intelligence. That's beyond the individual, and that's what we're all drawn to do. So even Bytemaster, who's big on no group traps, he is part of a small group, as are all the people doing anything in crypto.
That's a very good point.
Yeah, I think that observation is very keen, and I think just in general going forward, that working with groups of people is obviously has benefits that multiply rather than just add, in terms of synergy. However, I really don't like to talk too much about this in sort of a public way, but just to add a little bit of my 2 cents on the whole topic of being able to sort of hide your assets from the IRS or something, and I'm not advocating this in any way, but I think that look, we've got stealth features for graphene that will be implemented that will essentially create a no provable link between any assets. And this isn't just for BitShares or Graphene or PeerPlays or when we look at the way in which everything is moving on to the blockchain, I don't care what entity it is, whether it be the IRS in the United States or any other entity in the world, including, ones that have their massive supercomputers that they're running, and all these other things. They're not going to be able to keep up. I hate to say it, but, it's not understanding how to protect your assets is not it's something that sort of the elites have been doing a long time with things such as trusts and setting. There are actually legal ways to set up and keep your assets safe from taxation and things like that. So, but just in terms of safety reasons, what if all of a sudden tomorrow in a year from now you find that and you all of a sudden have $50 million worth of crypto tokens. Well, how you might feel sort of unsafe if everyone knew that, right? If you're walking down the street and everyone knows that you have $50 million, that all that's really needed to access that is a jump drive with a password. Then so these types of things, I think, sort of play into the notion that personal privacy and personal security is very much a personal labyrinth that must be navigated, and the ways in which you live your life and the ways in which you are public about certain things and private about other things has to be undertaken by the individual. I think it was Dan Larimer that said once, privacy is something that's difficult to achieve and easy to lose, right? Like you can, it takes a lot of hard work to truly insulate yourself from any prying eyes in any meaningful way, and it can also sort of all be lost at the stroke of a pen or at the click of a button, if you do something that exposes yourself. So it's not something that's trivial. It's not something you can just toggle everything to privacy mode and all of a sudden you're invisible. So I think that the tools to getting sort of bring it back to Tom's original sort of thought that he was expressing, the tools that we're going to have I believe will enable a much greater degree of privacy to those who understand exactly how to go about creating that sort of privacy bubble around themselves. And in that respect, I think that it's a wonderful thing because, again, those who can, sort of navigate their own personal labyrinth and understanding of, how not to expose themselves personally, then, we're very much going to be able to do that and not have to worry about the things that, we might have worried about in the past if, for example, all of our business dealings were primarily in national currencies or something like that. So,
well, we are currently sitting at approximately an hour and 45 minutes, which is fine. We have it set up to go up to 2 hours. Does anybody want to cover anything in the final 15 minutes that we haven't covered, or are we pretty much good for what we've covered today?
I'd like to ask in Genesis something. I watched your video and I found it very interesting and thought-provoking and whatnot, but I didn't come across any overt action step that you wanted people to take after watching it, so my mind has gone on to other things. I'm pretty busy with all the projects I'm working on. Is there something you want people to do right after they've watched your video?
Well, that video was taken at it was at a fintech conference in Seattle, and there was a question and answer period after that, and we got a little bit more into it. But so we are doing whatever we can. So we need to build curiosity. That's all I have to say. And there's some technological complexities to it. There's some actual real life complexities. How do you fill out your curiosity? It's a different way of articulating yourself or describing yourself. It's actually quite powerful and maybe even a bit confrontational to think of yourself in terms of a student or a teacher of something. And so these are some very practical challenges that will exist in building this thing. So we want people to actually watch the movie and tell other people about it and get other people to watch it. I know 16 minutes is a extraordinary investment in one's knowledge. Is what we're finding. Not many people watch a 16-minute video, and if we could articulate it any clearer, we would. And we're looking for people to come to us and say, "Hey, how can I help?" And then we look at we're going to take their curiosity, literally find out what do you do, what do you know, and then from there we can sort of set up a way for them to help. And this is how we've been surviving so far. and actually not doing too bad. We have a very interesting and diverse team of people that have come around this and are working on it now, but we need, oh gosh, we need everything that a startup needs. So we're looking for folks to come back and say, hey, you could do this better. What if you tried this? Maybe this application can help. I know this coder out here. I know a guy working on this. There's a lab down Stanford doing this. And that's how we've been growing.
Would you say that you're looking for, I don't want to say guinea pigs, but people that would be willing to say, okay, I'd like to participate in creating a curiosity. What do you suggest? What can I tell you about my skills or my, life experience that I might be able to create sort of a sample curiosity to interact with others?
Well, to give you an idea of the diversity of testing here, without even using any kind of a tech crowd, in our church, okay, where my son goes, okay, so my kid's school, we're trying to get, people, they want money, that they're always asking for money, and this whole time, talent, and treasure thing is just getting so old, and nobody has any money. So I'm saying, well, what if we were to organize ourselves a little differently? And we look at what do people know how to do, what do they want to teach each other how to do, and we use use this facility, this campus as a laboratory, so people can learn how to do carpentry while they're building a new storage shed, and they can learn how to use, do cooking while they're working in the kitchen, stuff like that. So if you want to use it if you have a community that you're trying to organize, utilizing the knowledge assets of the people there, try using a curiosity, and you can do it on a spreadsheet. You don't need to use a computer. I mean, you could it's a one pager, it's a matrix literally, and see how it works out. What are the challenges? What do people say? How are they confronted? What are the resistance points? And these are the things we need to know. Those really practical, in the weeds kind of things. What do people like about it? What do people hate about it? That's the chore.
Do you have any case studies that you've posted anywhere, particularly dealing with exactly what you're talking about?
Yes, but not that I've. Well, yeah, we've got tons. I mean, we've been doing this for a long time. And there's a group in Indianapolis who's doing it now among some wealthy people in Boone County or Bloom County or something, and they're trying to. It's in the philanthropic sector. How do these rich people give money away, and they want to do it more towards their personal interests and the personal interests of other wealthy families, and so they start accounting for those interests, and then that is used to determine where their money should be targeted to give them the most emotional benefit or something or another. So case studies, yeah, I mean, it's just a longer conversation than we can do right now. But I was testing it at Boeing for a number of years in communities of practice, and that was an old term of the early 2000s. It was bantered around in the knowledge management profession, which is kind of defunct now. But communities of practice are a good place to deploy them, where we have done it. But we always run into, okay, so I don't want to get into all the research, but yeah, we've done a lot, and I could share that with you later. Or if you have a particular project in mind, I could show you how to test a component of Curiosity in that project, and hardly anybody will notice. But then you'll be able to give us some good data and good feedback.
Yeah, definitely. I guess I was just thinking in terms of, the outreach that you're trying to do to get more people interested. If you had some sort of repository of particular case studies, so people could kind of look into them and learn more about working examples and things that you've tested over the years.
Well, we're doing it with the engineers, with the National Society of Professional Engineers right now. So it's not like, so it's pretty ambitious. We're trying to get them to reorganize, and that's because engineers have a very clear taxonomy or ontology by which they classify knowledge assets, and then there's plenty of ways to come up with a quality and a quantity for what they do. It's not so obvious in the general public, because they're okay. So then insurance provides us with a backbone. Again, it gets really deep, and not quite suitable for the general public to publish on a blog really what we need. It's curious people will find out, will come to us, and this is what we're looking for.
Well, we're looking forward to hearing more about it. And I'll say real quick, I'm going to go ahead and post real quick the next RSVP. And I would like everybody who is here who would like to have coverage next week consider posting to that, especially if you haven't had the chance to have your project covered today and you were on the list. So I'm going to go ahead and post that.
I just want to say thank you, Fuzzy, for everything that you're doing. You're a freaking rock star, and keep making it happen, and I'll keep showing up. And thank you everyone else for the great conversation as well. It was good to talk with all you, and I will see you next week.
Have a good weekend there, guy.
Yeah, bye, Mike.
Take care. We'll see y'all later.
Happy Steemit
you too.
Disbursement Day.
Great Freedom Day, too.